Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 6th of February. I'm Daniel Lam, your host for the podcast. Yesterday, we concluded that over the near term, investors would likely be seeking safe haven investments. Now, when you talk about safe haven asset, one of the very first ones would be the King dollar. Yes, the dollar has outperformed every single DM currency in the past few months. It's been up between 5 to 10% against DM currencies since September last year. But the US dollar was down by more than 8% versus gold over the same period. Now, the more remarkable fact was that gold rallied during a period of rising yields in the US. So, for example, the US 10-year government bond yield has risen by almost 100 basis points in that period. The relationship between real yields and gold broke since 2022 as non-price-sensitive buyers, like central banks, increased their gold holdings to diversify from the US dollar. Now, to us, that is the dominating driver of gold prices right now. And the America First policy of Trump would exacerbate such a trend, especially for the central banks in the emerging markets. In fact, gold's share of global reserves now is at its highest level since the 1988 US elections. Technically, gold broke above its previous peak in October last year. That resistance level at 2,800 has now turned into its first key support level, followed by 2,600. The relative strength indicator, i.e. the RSI, has been rising alongside gold prices, signaling that there is still increasing strength in this upward momentum. Now, initially, there had been a sharp rise in open interest, which means short covering was driving the leg higher in spot prices. But we believe strong fiscal demand from India in the fourth quarter last year and the recent Chinese buying has been providing strong additional catalysts to drive gold higher. Therefore, investors should be buying gold on dips, especially if it pulls back to the aforementioned levels. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.